Welcome to Masters of Real Estate. Today, I have a very good friend of mine on the line from a group that I'm in called Raise Masters that focuses on real estate and focuses in the multifamily space. Ivan, thanks a lot for coming, man. I really appreciate it. I'm excited to talk to you today because of some of your experience in real estate and the multifamily specifically, because we're seeing, a lot of stuff happening in the market right now, and a lot of changes are happening. I think, as a real estate investor, you got to learn to stick and move and constantly take action as things change. And so I'd love to just get into it a little bit about what your story is and your background, how you started off in real estate, and then, what you're doing now, man.
Yeah, for sure. Thanks for having me, Matthew. Great being here on your show. It sounds good, and great being on your show, and look forward to it.
Awesome. Tell me a little bit about what your background, man. How'd you get started?
Yeah, man, I got started in the single family space. Basically, I got involved in real estate because I put money in the stock market and lost it all like the next day, and it was like leaving a dagger in my heart, man. And so I said, there's got to be a better way to make your hard-earned money work for you versus you work for it. So I discovered that single family investing. I was moving down to Texas from South Dakota and staying at my mother-in-law's house. And she said, hey, there's this lady going through a divorce down the street trying to sell her house. Why don't you go see if you buy it from her? Long story short, I went down the street, literally dropped everything, went down the street, knocked on the door, and bought her house for $33,000 that day. And ended up renting it out for about $850, cash flow about $300 a month. That's when the real estate bug was set, and everything else changed in my life after that.
I call that real estate crack, because then you're basically hooked now forever. If you start to see that and you see the gains that you can make on that thing, and do you still own that house today, or did you get rid of that one?
Oh, right. Yeah, I ended up selling that house probably 10 years later, I think, something like that. So
okay.
It was a good run. It was a good run on that house.
I think that's a common story, though, what you're talking about with a lot of different people, where you have, a lot of money in the stock market, but you don't have control over that investment, right? You can diversify it into stocks and bonds and mutual funds and CDs and, money market and all that kind of stuff, but that's not true diversification into, different strategies. And so when you first started, you started off in real estate and got that bug. Did you start moving all your money into single family homes from the stock market and other places, or how did you then start to reposition yourself?
Absolutely, man. I remember having money in my Roth IRA, and it wasn't a whole lot, but I was a young guy back then, so it was something. And I was like, you know what? I'm going to cash this thing in. I don't care. I'm going to pay the 10% penalty and put all my eggs in one basket. It was my attitude. A lot of it was driven by, again, the frustration and anger that I had from losing I didn't say earlier, but it was like $24,000 that I lost in a stock market. I was a young lieutenant in the Air Force, and that was like my life savings at that point.
Yeah, that's huge. And same thing happened to me. I worked at a CPA firm, quit my CPA firm job to go into real estate, and was a real estate genius for about a year and a half before I lost everything. And you learn some real hard lessons that way, right? And I think it's important to understand, like, hey, everybody goes through this. And so were you in the military to start when you first started off into real estate, or did you have another job first, or what's your journey before you started in real estate?
Right. I went to the Air Force Academy and graduated there in 2001. I always wanted to be a pilot. So my first job in the Air Force was flying airplanes. And I ended up flying airplanes for 20 years in the Air Force. But it was a government job, salary paid worker. And, the reward for working hard is more work, And so the more I worked, the less my hourly wage was, or the less my income was. Of course, it was a service, so it really isn't about money per se. You join, at least for me, I joined for reasons other than just trying to make money. But
right,
I couldn't help but have an investor mindset. I'm like doing the math. I'm like, wait a minute,
you're making $10 an hour. Yeah.
And I was like, I got to find a better way to make money, especially after I lost all that money in the stock market. And I had this personal conviction that I didn't want to work for anyone ever again once I retired from the Air Force, knowing that what I can create with my own mind and my own energy. So I set my path on real estate and what I
Okay.
want to do once I retire.
And then you started, you got your the bug, I'll call, as you said, from getting that first deal under contract and that first rental. And did you do other single family after that, or how did you make that transition, or why did you make that transition to multifamily on that side?
Sure, man. So yeah, I jumped into the single family space, made some mistakes and realized I needed a mentorship. And when I got got into my first mentorship program, it was a 2-day event. The first day was single family, the second day was multifamily. That's when my eyes were open to the multifamily world. I was like, oh my God, there's a whole nother level of investing in real estate. No, but I didn't quite have the mindset, the self-belief that I could go jump in that space.
Right.
Again, being a young captain in the Air Force, your wages aren't that high, and I had a family, and so I was like, how am I going to make this work? I said, well, let me go to the single family space and build up some equity that way, some capital. So I ended up getting, about 30 homes. But one of the pivotal moments was, I ended up getting my real estate license towards the end of my career. And I had a job where I had some flexibility to it. So I was able to sell houses during my lunch break and after work. Ended up
Nice.
selling about 99 houses in 2 years.
Awesome.
It really jump-started my real estate career, bought about 30 homes. Well, one of my clients, my first client, who's my business partner today, we've been partners for roughly 9 years now. I remember being in one of these foreclosed homes in Oklahoma City,
Hmm.
cold, dreary day in winter, and underwriting a single family deal. I was like, man, this thing isn't working anymore. We can't get these 2% deals. The cash flow is
Right.
not there. I was like, hey, I've been thinking about this multifamily business for quite some time. And I know there's this 2-day event going on in Dallas. Would you come join me to that 2-day event? So he did. We went to the 2-day event and signed up there on the spot and joined that course and hit the ground running in March of 2016 and never looked back. And I gave everything I got to multifamily investing. I sold all my houses, put all my eggs into multifamily investing. And again, with the intention of being fully retired once I retired from the Air Force. And so, we started in March of 2016, started buying properties in Oklahoma, Class C buildings from 50 units, 100, 210 units,
Nice.
156 units. Moved over into Dallas, Salt Lake City, Kansas City, Arizona, Florida. Started buying Class C and Class B assets all over and raising money primarily through syndications, but we do have some private equity relationships as well. And today we've done roughly 3,000 doors, bought about 19 properties, sold 14, and
Awesome.
through our partnerships, been able to raise roughly $90 million in capital.
That's amazing, bro. That's an absolutely awesome experience. And, you make it sound easy, but I know there's pain behind those eyes for sure, dealing with all of that stuff because, granted, I think there's a very common story, right? You come into real estate and you start with single family, you realize the benefits of going bigger, right? But nobody has the confidence level to think that you can go raise $90 million for all these projects to keep doing that and keep the lights on and consistently and do that over and over again. That just seems like a crazy pie in the sky type thing, especially when you first start coming out and you don't have that confidence. I did the same thing. I flipped over 1,000 of these things before I figured that out. You know what I mean? I just thought, oh, I'll
Absolutely.
just scale it this way, which is way harder than dealing with the multifamily space, even if you have the confidence and the database and the understanding of how to market and raise capital and protect investors and things like that, right? It takes a lot of knowledge and a lot of pain that you go through to learn those lessons. Can you talk a little bit about some of the trials and tribulations you had along the way, some of the insecurities you had when you're raising the money initially? Because I think a lot of people want to get over that hump, right? They want to get over that, that how do I take it to the next level hump, right?
Man, how much time do we got on this one
Yeah,
here?
yeah, for sure. It's like
Listen, man, like,
here's
dude,
90 stories on
I had
problems.
all the insecurities, man, all the insecurities. One, my mindset was I'm just a pilot in the Air Force. What do I know about finance? What do I know about Wall Street kind of money stuff,
Right.
And I had this dissociation with this arena of high level investors. And it was inferiority kind of complex happening, maybe something like that. So the first thing I had to do is learn to invest in myself and get myself right. and go on my own personal journeys of why I wasn't seeing my own worth, my own value, my own skill set, unique things that I can bring to the marketplace
Mhm.
to make this world a better, this world we're in, a multifamily world, I guess the world at large as well, a better place. And that's a never-ending process. The first thing you have to do, in my opinion, is invest in yourself, which I did. And that gave that, through that process and uncovering those insecurities and hitting them head on, it gave me absolute clarity and certainty with visceral conviction, if you will. I know there's some big words there, visceral conviction of knowing who I am and what I want, and then setting my eyes on that thing like a freaking bulldog and going after it. And that's what gave me the courage, action, gave me the courage to step into this thing. But my first raise was like, now we're doing big raises, but back then our first raise was like 1.5 million. And I remember that was a big,
It was
big,
scary to you, right? Yeah.
number, man. I was like, oh my God, I don't know anybody with any money, and that's part of like my circles, like, we're all hardworking men and
Right.
women, but I mean,
You raise like a couple $100,000
you know
from
what I
your
mean? It's
circles
not
and then
like
everything else.
millions and
Right.
millions and millions like some of these other circles in this space. So I had to find a way to overcome that. Well, I partnered with people. I partnered with people who already had a network of people that they were able to raise money from, and I brought them to my first deal. And brought in people who are already in the marketplace in Oklahoma City in the first deal. And they saw obviously something in us. They saw, some kind of something of value. And I said, yeah, I want to partner with you guys and let's go in and do this. And I got lucky. I found really great partners.
That's
and
awesome.
to get us our first deal. And our first deal, we bought 3 properties at the same time, 3 apartments at the same time, 3 loans, 3 LLC.
Wow, that's not easy.
It was insane, man. We bought a 50 unit, 99 and a 65 unit, 2 in Norman, 1 in Chickasha. So one was like another 45 minutes south. And those were the first deals that we cut our teeth on. But, when you talk about challenges, man, a lot of my challenges have been dealing with in good. Well, I don't want to sound totally downer, Debbie Downer about property management companies, but there's a lot of good ones, but there's a lot of challenges, not so good ones out there. And so let's just put it that way, And so, the first property management company brought in, was not any structure, no corporate structure backbone. Now we did bring him in, and I take responsibility for this, right? But I learned a lot about what makes a property management company a successful company. And I put together a big list now over the years of working through with many, many companies, but a lot of things that you want to look for is make sure they have a very strong accounting department. Speaking to CPA here, so I know you know what that means. Very strong accounting department. Make sure they have a good construction arm. Make sure they have a deep bench on the management team member side, meaning they have a good HR department hiring good managers on a constant basis. So you're not having any gaps in your manning footprint at the property level. A lot of things like that I had to learn the hard way as I was going through these challenging experiences with the pressure of having to create cash flow for my investors, knowing we have distributions coming up and things like that. Obviously, we're able to navigate through those challenges, and some deals were home runs and some were not so good home runs, maybe first base. I mean, then have some really good grand slams all in the mix of these full cycle offerings that we have had now over the years.
I think that's, key. Teams are important. You got good partners on the capital raise side, but there's teams on the operation side that can destroy you. And the property management is probably the biggest one, other than the contractor and the managers. And then you got the asset managers as well on these big multifamily projects. And I swear, every time we go to a new market, we have to find 5 property managers, and one of them is going to be good. The other 5 or the other 4 are going to be horrible, So, and you learn the lessons the hard way as far as what makes a good manager. And we even ran our own management company as well, and that is extremely hard. And you really, it's not a fun business, property management. It is, bringing problems to your doorstep, just because real estate is all a matter of solving problems, right? So and those problems exist, and then you got to manage your manager over and over again to make sure they're efficient and on board and tracked correctly, and realizing that, hey, the mom and pop ones that don't have a lot of units, they're having a hard time with overhead, right? They can't cover things. They may not have in-house team members that can deploy right away. They're using outside people that are inefficient in different ways. And so, understanding those operational efficiencies and inefficiencies from a management perspective is paramount to doing what you do as an operator now, right? And being able to find the right deals, but find the right team that is going to operate that. Because the raising the money is one thing. The operations side, in my eyes, is 10 times harder because it's ongoing forever too, for a long time. And that's got to be managed correctly. And then you got the asset management above that. But what's really cool that I really like about the multifamily space, the commercial space in general, mobile homes, self-storage, all the different types of larger deals that you go into, is that you can do it passively. You don't have to do what you're doing right now or what I'm doing right now, which is the operations side of this that is a lot of work, right? You can actually invest passively and not have to qualify for the financing, not have to manage the managers, not have to go through and, do all of this extra work involved to get your return on investment over here, and get all the benefits. Can you talk about some of that stuff from an investor's perspective, and what some of your investors like about some of the deals you're doing, and how they're kind of performing in different ways and what the benefits are to them?
Yeah, absolutely, 100%. I mean, just like you said, we take on the entire brunt of the workload and truly want to make this a passive experience for our investors. And the mindset, the attitude, the scorecard that I hold over my head is I want to make that the best investor experience that I possibly can. And now that's my heart, that's my mindset. Now, do we ever get that exactly right? No,
Yeah, it's hard.
but I'm
Yeah.
definitely shooting for that. So what that means is a seamless, frictionless operation from a passive investor standpoint. One, where they have trust and faith and confidence in who the operator is. And what I would emphasize, even though you're passive, there is a level of due diligence I believe passive investors need to take to make sure that, one, they're investing in the right jockey, then two, they're investing in the right horse. And there's a series of questions and checks that they need to go through to make sure that the person that they're handing their money over to is a fully verified, vetted, knowledgeable, and experienced investor in today's marketplace.
Mm-hmm.
And that does take some understanding of what a good operator is and what are the mechanics that are involved in the asset class that you're investing in, this case, multifamily. And so I really believe that's where education comes in. A lot of what I do is help my investors understand that piece.
Mm-hmm.
And a lot of ongoing what I do with my investor communication component, where we give regular monthly investor reports, is we share the good, the bad, and the ugly, clear and transparent communication. We talk about exactly what's going on, but then provide driving factors as to why.
Mm-hmm.
Help them understand operationally behind the scenes why the property is performing the way it is, either good, bad, or ugly, or indifferent. So,
Mm-hmm.
So yeah, that's a lot about what passive investing is. And we have some investors who are really, really involved because they're maybe active investors themselves, or they have some type of operational business background. And we have other investors that literally don't hear from,
Right.
and they're off doing whatever they are doing. So you see a lot across the board, but the idea is that these are incredible alternative investments for people to truly make a great return on their money.
Mm-hmm.
Assuming obviously they place their money, it's a bet at the end of the day, but they're
With the
doing
right
it
person. Right.
with the right person and the right asset class, where they can realize a projected high multiple return on their investment.
It's interesting because from one standpoint, you can diversify into multiple operators, multiple asset classes, multiple markets of the country, and develop this passive cash flow portfolio that literally can retire you, that a lot of people don't understand even exists, right? Because they're normally investing in stocks, bonds, mutual funds, and like you in the beginning had no control over that, and can lose it, right, very easily, right? And then, but the caveat to that is they need to learn how to do the right homework so they don't get screwed with the wrong operator, with the wrong deal, not understanding the risks in the market. And so, understanding the due diligence on the operator that you have to do, understanding the due diligence you have to do on the financial model, on the property management company and the asset management team and things like that, on the market as a whole, on the debt stack and issues that come up there. All of those little things need to be taught, right? And so you have to start hanging out with the right people to learn those things and get the right legal advice and the right team member advice that can teach you those things, so that that way you can do that. And that's what I like about what you do, man, is you're teaching investors the right way. So, and being able to say, hey, look, this is the homework you should do. Go do a background check on me. Go do a criminal check. Make sure there's a preferred return involved on the deal, which basically means that the investor gets paid first and then you get paid second as an operator. So there's alignment for performance. I don't invest in anything that doesn't have a preferred return because I don't think there's alignment for performance. I could make a 2% return and the investors and the operators still making money over here. And so there's a big kind of hurdle to that entrance to investing in these strategies, because most people don't understand how to do the homework first so that they're comfortable enough to invest. What are some of the things that you teach your investors to get them over that hurdle, so that that way they feel comfortable enough to start this strategy? Because truly they're sitting on the edge of financial freedom over here, but don't know how to get there because there's too much fear and lack of understanding of how to actually do that homework.
Absolutely. Every deal, in my opinion, is underwritten or understood from the ground level up.
Okay.
Ground level up. I would start at the micro level. Why this asset? What about the location? What is the opportunity of the asset? Where is the value add component? Again, who and what, right? So who are the operators, the property management company? What is their experience? What is their background? What type of construction value add piece? How significant is that construction value add piece? Meaning, are you just doing light turns, light rental turns? We're doing deep renovation turns. And at what timeline and schedule? Really, you have to put on the operator hat and put yourself in the shoes of an operator. Don't have to understand it to the nth degree, but do see if it passes a sniff test. If an operator is saying they're going to turn 30 units a month with 2 crews, I mean, that's a very obvious example, kind of like, dude, that doesn't make any operational sense. Are you sure about this? And if you can't produce the turns, you can't raise your rent. You can't realize your rent bumps, right?
Right.
Like, well, maybe the freaking revenue is not going to come in like they said that it's going to come in. Like, something doesn't make sense. So when you start asking, like, honestly, just very simple, like straightforward questions like that, it'll help you go down these rabbit trails to truly vet the deal to see if it makes sense. And what you can do is get references on the operators and understand and unpack the previous deals. And, maybe there were some deals that weren't as strong or favorable. Ask them why, and not to shoot them down, but maybe to see like what they have learned from the experience. And a lot of, honestly, some of my deals didn't go as strong, but because we were transparent and forthright in how we navigated through some challenges, we had return investors. Just because they saw that we stood upright through these challenging situations. At times, things out of our control.
Yeah.
That impact the deal. I would say, like, COVID or an ice storm, or, unfortunately we had like a fire on property right in the middle of a closing and had to postpone the closing and start all over again. Or, one time we were selling and there was a death on the property and the lender backed out, all these kind of things, but we still stood strong through these challenging situations and still realized a significant return for our investors. But like in those scenarios, like, oh, those reasons make sense. I can understand why, and through those questions, which, you should have your database of questions, and you may offer your listeners these questions for them to use to fully vet a deal and an operator, then you're going to develop a pretty good understanding. And what I would do is listen to multiple presentations. Go on a journey if you haven't done so already, maybe like say 7 to 10 presentations. See who stands out more than others, and then understand why. And if there's some substance to those reasons beyond just some flashy marketing kind of presentation, but from a content standpoint, like, why does this person stand out more? And then I think you're going to have a very good sense then of who to make that bet on, right? Yeah, and it is a risk at the end of the day, but when you're informed, you've done your homework, you've done your due diligence. A lot of this is upfront training that you are going through. It doesn't have to be to that level, the next deal, because you're going to have your own now knowledge base that you get to draw from moving forward. But once you do that homework, I feel it's well worth just that investment there alone, beyond outside of, again, investing in the stock market
Right.
or bonds and treasuries, even though the rates are higher these days. But from a long-term basis, the multiples of return that we get on these type of asset classes, and with the pre-tax number that we're talking about, and you
Mhm.
adjust things for the tax savings that you get to realize on a accelerated depreciated type asset like multifamily, um, that even increases your return even more so, right?
Yeah, a lot of people just invest for the tax benefits alone on some of these because you can front load depreciation into year one and take these massive tax deductions. I don't really pay as taxes because of this type of these type of strategy right now. It's huge. And it's interesting when you're talking about, the different metrics that you have to do the due diligence on. Yeah, it's a lot of work up front to learn how to do this, right? And like you said, go to 10 different people's presentations, read 10 different private placement memorandums and the paperwork for those investments, so you start to really understand all the provisions in there. Go get outside legal advice and outside investment advice for someone that's done this for years, and ask what those provisions are in the operating agreements. Go into detail on the management team. Well, what are your collections procedures? What are your renovation procedures? How many guys are you going to have rehabbing this thing? Because I'd be shocked if they're doing less, more than each crew doing more than two a month, for each individual crew, because you're talking about 2 weeks for a unit turn and a renovation. I mean, maybe they can get it done in a week, but do you really want to take that chance? Right. And if they're trying to say they're doing 30 a month, you better have 15 crews on that thing to get that done, because every single one is not going to take, they might, you'll be lucky if they take 2 weeks sometimes, depending on the crew, right? You could have a really slow crew and some of them are going to work out, some of them are going to fall off. You didn't make sure that people are there to pick up the slack if they had to, right? And that's a big challenge with a lot of these. The numbers aren't real anymore if they project that they're going to do 30 of these all in the first month. And then, of course, the lender's expecting the money to come up. And so they're holding back your construction draws. And you went over all these problems that investors don't have to deal with, which is one of the coolest things about this, is that they don't have to do that work involved to do this. You're able to do that as the specialist. And so what you're doing as a private investor here is you're investing with the right operators, right? You're picking those operators that you want to work with, and you're diversifying those operators. And then you're saying, hey, I'm going to give up control of this investment to the operator to do the work, but now you can diversify across the board and have no work and have a big, income stream coming in. And there's going to be some losers. And if there are losers out there, then hopefully you're not destroyed by it because you were properly diversified into all these things. If you have $1 million invested and one $25,000, $50,000 investment goes bad and doesn't produce a return, or you take a $10,000 or $15,000 haircut on that, you're not stressed where you're losing everything in that kind of situation, right? So, and I know we're seeing a lot of issues on the market right now because of the lending environment that's out there with regard to multifamily. It's kind of a stuck market at the moment, right? Hard to get deals refinanced, hard to buy new deals because of the financing in place. What are you seeing out there as far as the trials and tribulations of the overall market in the multifamily and commercial lending space that you're concerning to you?
Oh, absolutely, 100%. I mean, obviously, the rise in interest rates, it's uh, debt covers constraining our opportunity to get higher leverage on these deals. So,
Right,
and the sellers, are not wanting to come off their pricing, maybe because they can't. So
right.
there is a huge gap to get deals done, and this is the slowest season that I've ever been in since I've been in the multifamily, I guess, real estate for that matter. And but you have to be conservative and stay to your buy box criteria, stick to your guns, but know that there's an opportunity right around the corner coming. We're going
Right.
through a pivotal time where pricing is being adjusted, and it has already come down to peak levels upwards of to 30% now. I've
Wow.
seen in some cases in some markets, and there lies your opportunity, right? And then again, there's a lot of deals out there that are highly leveraged on bridge debt that may have pref equity on top of that, and that cannot pay the current pays to get these deals done, and they have to go to market to sell at a loss.
Hmm.
Or, I want to talk about what happens after that, but
Right.
that does have an impact in the marketplace. And so for those that have been waiting for this opportunity again, because they weren't comfortable when they saw the huge increases in the previous
Pricing.
cycle.
Mm-hmm.
20, say even 20 all the way up until it peaked out around 22-ish, like, dude, this is your time. It's
Mm-hmm.
coming. It's
Right.
coming. So, but the thing is, it takes momentum to get to a level where you're ready to invest from an active standpoint and even passive standpoint
Right.
where I wouldn't wait until then. I would start doing the homework now. Again, underwriting operators and starting underwriting deals so that when that deal comes, that opportunity, you are on the edge of your seat, ready to go.
It's absolutely true, and a lot of people run for the hills when things have crashed or they're afraid because they see what's happening. And I'm not saying it's crashing, but when things are volatile or having issues out there, you're seeing a lot of people like be afraid and hold off and wait. And in reality, they tend to wait until it's too late, right? Until everybody's now starting to get back in and they see a turnaround happening versus jumping in once it's had that correction and you see it based on current fundamentals of that actual deal. And there's going to be so much opportunity coming out of this because of the turmoil we're seeing right now when the smaller banks are not lending because they took major hits right now with the banking crises, and they were 40% of the lending market as a whole. And then now you're dealing with Fannie Freddie as the primary lender you're going to in the multifamily space. And so, I'm investing in a lot of short-term type debt opportunities, some alternative stuff in the meantime, while I watch this occur and waiting for that time to just pounce, and having dry powder on deck, waiting for this opportunity and seeing it is key, but being able to recognize, hey, that deal is the right deal to invest in, right? That deal right there is the key to is has the right underlying fundamentals that make sense and have the right risk ratios compared to return is absolutely important. And not being too afraid to jump in when everyone else is running for the hills, because that's how you make a lot of money. When I was buying in 2012, it was the best time to buy, but everyone else was scared. You couldn't sell a house to save your life, but that was like an amazing time to pick up property for pennies on the dollar from where it really was. And those fundamentals were great. I was buying 12, 13, 14 caps sometimes. It was ridiculous, and you're just like, oh man, why don't I just hold those forever instead of being a flipper? One of my biggest mistakes is selling 1,000 houses instead of holding them all, So, and you realize that, but I think I've rebought houses from some of my investors as well and going, dang it, that would have all been my equity right there that I just gave them. But hey, you in the beginning, you go through your own lessons. You think you need the money right now. And a lot of flippers out there are like, I got to flip because I need that cash to come in, but you don't need that necessarily. If I would have known in the beginning, I just would have raised syndications and held them all and put a fee in there to keep my lights on the whole time so that way I can actually live off of that and develop this massive equity stream. It's just a matter of your thinking at how you structure this and make money off of it. So there's so many strategies to utilize. I'm excited for the future for both of us, actually, because I know you're in the space quite a bit and I'm in the space as well, looking around. So how do people reach you if they want to get to know some of the deals you do and some of your underwriting, man?
Yeah, absolutely. Come join my Facebook group called Apartment Ninja Warriors. Apartment Ninja Warriors. You'll find a lot of my tools, tips, and tactics that I use as an operator to help you as an operator, but also a passive investor so that you can better underwrite the jockey and the horse in your next opportunity.
That's awesome. That's exactly right. And there's so much free information out there, just like your Facebook group, to learn these strategies. Start to learn, get involved in groups like that so that you can actually go out and take this in slowly and jump in when you're ready, when your education is to the point where you feel comfortable enough. That's the perfect opportunity to be able to gain the knowledge you need to create that true financial freedom in your life. So thanks a lot, man. I really appreciate you being on today. And I look forward to, talking with you about your deal soon, man.
Right on. Thanks for having me, man. I appreciate you having me here, and good luck to all your listening audience.
Thanks, man. Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. Three of the key pillars to becoming a successful real estate investor. Number two, You can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number 3, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.